Hey everyone, Sherif Nathoo here, your real estate agent with C21. Today I want to talk to you about investment properties and how you can make money selling real estate. So a few weeks ago I asked a bunch of you questions on Facebook if you had any questions about the market or wanted to know what was going on for a property in your neighborhood. Hey everyone, Sherif Nathoo here, your real estate agent with C21. Today I wanted to talk to you about investment properties. Last week I had asked a few of you questions about the market, if you had any questions about the market, if you had any questions about properties, and a few of you sent me an email actually requesting information about investment properties and how they work. So I want to show you today how an investment property would work for a condominium versus a freehold. So this is a property evaluator that I use with most clients on determining the value of an investment property. So let's take a look at some data over here. If you were to buy a condominium downtown Toronto for $550,000, I'm going to see if I can turn this camera off. It looks like I can. There you go. So if you were to buy an investment property for $550,000 in the downtown core and get a mortgage of approximately 65%, so you're putting down 35% down payment, and you get a mortgage of 3.49% with amortized over 30 years, your monthly payment would be just under $1,600 a month. Now, what I did over here was I put some buying costs over here to factor in land transfer tax, legal fees, and this is a little bit on the high end, but it's just to give you an idea of incidentals as well and to take care of any other closing costs. Total investment will be $214,500, and you get a monthly rent of about $2,100 downtown Toronto. We put in a vacancy rate of 3%, and this is just to factor in any sort of vacancies, whether it's maybe a half a month or missed payments, something like that. Then we put in the cleaning costs. So on average, it would cost you about $1,000 to manage a year to manage a condo. So from repairs on appliances, any minor maintenance required, and this doesn't include any expensive things like unit turnaround. So for example, painting the entire property when a tenant moves out. On average, a landlord will have to pay an insurance of $280. So landlord will have to hold insurance of $280 per year, and that's the average price of a condominium landlord-tenant insurance coverage. And companies like State Farm, Desjardins, same company, they're the ones that are probably the cheapest ones. But if you do have a car and a principal resident, getting insurance for there will be a lot cheaper as well. If you were to have this property managed by a professional company, it'll cost you about $143 a month. Property taxes on average for a one-bedroom condo downtown is about $2,150 a year, so $179 a month. Condo fees, this is on the high end. Everything is determined by per square foot, so we put here $436. So your net operating expenses would be $864 and would give you a negative cash flow of $426 a month. Now, a lot of people look at this and say, okay, what does this mean? Why should I buy a property with negative cash flow? And the truth is that negative cash flow is not actually a bad thing. It's always better to have positive cash flow, but you won't see that in Toronto properties unless you've put more than 50% down. So if you're buying single unit properties, always expect to have a negative cash flow. But let's see how it actually serves you as opposed to opposed against you. So what I want to show you over here very quickly. So you see this number here, negative $426 a month. Let's look at the mortgage payments here. So if you see this at 3.49% amortized over 30 years, you have your payment would be this. So $1,000 of it goes to interest, and $566 of it goes to principal. So of the $566, you're eating up that $400 negative cash flow that we just saw, right? 426. So you're not really building much equity. So in this property, you're banking on appreciation. So we've put in an appreciation rate of 6%, vacancy 3%, income inflation 2%, expense inflation of 3%. And let's take a look what the numbers show you. So if you were to hold this property for about, let's look at this over here. So based on holding this property from 1 year to 10 years, we are looking at, after you've sold this property, what would be your return on investment. Remember, we took into account negative cash flow, inflation rates, vacancy rates, other expenses. And so you'll see that if you were to hold, and 6% appreciation. So if you were to hold a property for a minimum of 1 year, your return on investment is negative 8%. Okay? If you held the property for 2 years, you're up at 4% return on investment annualized. And in year 3, 8%, and year 5, 10%, and in year 10, you'd be at, again, 10%. So it flattens out approximately around the holding the property for about 5 years. Now, in this time, it doesn't take into account the increase of rental rates as well. So yeah, we did an inflation rate, but think about it this way. In the last 2 years, we've had rental rates increase anywhere between 20 to 40% in some locations. So this might serve you in the future. Now let's take a look at houses. So let's say you bought a property in Ajax, and I had to go to Ajax to find this property because there's nothing else that would compare in terms of price. So let's say you went to Ajax and purchased a $550,000 property, again with the same mortgage rates, same buying cost rates. I put 2%, so I'm actually going to change this to 4%. Let's make that change right now. Right, and then total cash invested $269. So rents in Ajax are approximately the same. It's around $2,200, but I'm going to reduce it to $2,100 over here just to give you a better indication. We're keeping the vacancy loss at 3%. Cleaning and maintenance. Now, generally in a home, it'll cost you about $1,500, but I want to increase this to about $2,000 just to give you a better indication, more realistic number. We put in here commissions here. So if you were to rent this out 1 month's rent, we put $2,000. I should have used this same number for the other for the condo as well. But let's take a look at and see what happens over here. So insurance on a freehold property, typically $1,100 annually, more than a condominium property because now there's more to insure. Management fees, $143 a month. Property taxes in Ajax are a lot higher at $3,400 a year. So overall, we have a negative cash flow of $166. So this is not bad compared to what we just saw for freehold. Now, we did the same thing over here. We put 6% appreciation, 3% vacancy, inflation rate 2%. We take into account inflation. So let's see what this turns for you after 5 years of holding this property. So after you held this property after year 1, you still have a negative cash flow, a negative investment at 5%, and then after year 3, excuse me, year 5, you're seeing the same return on investment between 7 to 9% return on investment. Now the return is almost the same, but the costs are different because obviously in the Ajax location, you're looking at higher property taxes. We took into account the commissions rate here. So if you were to buy this versus the condo, I believe that the properties in Ajax have a better ROI than the condominium properties downtown. However, at the same time, condo properties are appreciating significantly higher, and right now we're sitting at $1,000 a square foot in the GTA, in downtown Toronto versus what we're seeing outside. So Toronto condominiums are probably going to be worth well over $1,500 a square foot in the next 10 years. So that is all the information I have here for you for investment properties. If you have any questions, give me a call back at 416-274-1513 or send me an email at sherif@thesnteam.com, and I'd be happy to help you out. You take care. Have a great day.